Hello, 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 everyone. How is everyone doing today? Well, choppy back and forth day in the S&P, Nasdaq, little pullback with the with bonds rallying, yields up, and tech pulling back. Pretty big day in crude, not bad. Crude up over 5%. So nice little breakout in crude. Hey, Patrick. Good afternoon, Jacob. Good evening, Charles. Hey, Daniel. Good afternoon, Stafford. Hey, Rich. Good evening, Anissa. Hey, Coco. Coco, really. Lunchtime rock show. Let's rock and roll. Hey, sounds good to me. Thank you for being here. AP's World. Hey, hey, hey. All right, everyone. Just a reminder, site memberships for the YouTube channel are going away at the end of the week. It will be donation again only. Donation to support the channel if you want to. Also, no more Sunday live streams, and there'll be probably some more changes coming up. So we shall see. We shall see. But let me welcome you all again, and thank you for being here. So, recap: Dallas Fed Manufacturing Index expected -10, coming in -15.7, worse than previous. So manufacturing in a regional sense, being Dallas, still pulling back. We got Jefferson speaking in about Fed's Jefferson speaking in about 25 minutes. Some of what Barr's testimony, which is start tomorrow, some of that with the remarks were out this morning. If you're interested, you can look at that. Tomorrow morning, what do we have? We got some home stuff, home prices before the open with the home index, wholesale inventories, retail inventories at 7:30 Central, so 1 hour. But nothing that's, we got some numbers and they can have a minor effect, but nothing's really going to make or break the market. Consumer confidence, you know, expected to pull back a bit from previous. And then we got Barr's testimony. And this is regional Fed indices week. We got manufacturing and services from Richmond Fed and Dallas Fed services tomorrow. Again, the only thing I'm monitoring is whether they're still in contraction, how much they compare to the recent one. So, we got expected to have in contraction, Dallas in contraction. Still now, Richmond Fed services are expected to pop out of there, but that's one to keep an eye on. Now, or can these be market moving minorly? They're not going to, again, make or break the market, but it's important to keep note of them. You see some comm services were some pretty big pullback today. Profit taking in some tech and comm services. You got financials leading it along with energy on the rally. And we still have, energy financial. Still money going into consumer defensive. And you see the only two, real estate was down 0.6%. But really the two major negative ones were technology and comm services leading it lower after a big rally over the last week in comm services. Fear and greed is still in fear at this point. Oh, where is my CME? Great. CME Fed Watch. Here we go. Sorry about that. Hey, we're almost back to 50-50, 53, actually 53-47. So the odds are getting closer again that we might still have one more hike in us. Let's check the probabilities too. Oh, see, still favors the hold for May, June, July, and then the cuts start September, November, and then starts going down in January next year, falling out of bed. So just keep an eye on that, but still at least pricing in a pause for the next few months. Nothing after the close in terms of earnings, so let's just forget about it. Tomorrow morning before the open, the only thing of minor importance is Walgreens, unless you're heavily into spice. I mean, you might be if you read Dune. You might be into spice, but after the close, we got Lululemon and Micron. So tomorrow after the close is pretty big. What else do we have? What else? Good afternoon, Sterling. Hey, George. Hey, William. Bruh. Double top on daily chart with a bearish divergence. We'll take a look. Good afternoon. What was the crude rally about? I don't know. It was just a nice little rally. I probably missed something today. That's something we can ask Bob tomorrow. So S&P, it was really caught. If you look at this 4-hour time frame, up close so far. Well, we got 20 minutes left, but so far just caught between support and resistance. See it real nicely on the 1 hour. Support, resistance. So nothing's really changed. Going into tomorrow, the bigger levels, we'll just touch on the bigger levels. A breakdown below 4,003 is a level based off the candle bodies, and then you can go at 4,000. Remember, we still have the major gamma wall at 4,000. Now, below 4,000, even for overnight, you're into a clear path move. Into a clear path move. All the way potentially down to about 39.60. So that's the only way I start getting, that would be just minorly bearish. Where would that take us on the daily? Where would that take us? Well, that would take us to the lows of last Thursday and Friday, the low area. But it would still be above the key breakout area. Right now, so far since last Tuesday up, Wednesday down, but look, we're caught in a range, a really strong range. You know, this is a whole bunch of nowhere. Slight uptrend from mid-March, but a whole bunch of nowhere. Until we really start breaking above 40, 41, I can't overly shift. Again, I don't need to repeat myself from this morning, but that's really when I'll be watching for more sustained breakout, or, you know, we start getting below that 4K level, and that's still not really negative. We start getting below about 39.50 with momentum, then I'll shift for short-term negative. The NASDAQ pullback in tech with rising rates, but not, look, I mean, a whole bunch of nowhere. If you do candlestick math since last Tuesday, we have a slight red candle. Nearly a doji, but still holding up above the rotation zone. Holding up. Sideways. Your overall bigger level before the breakdown is about 12.7. Till we start either momentum below 12.7 or at least a key daily close below 12.7. Nada, zippo, zilch. No, this is not a double, bruh. So really, this is the other challenge. If we look even at the 4-hour, look, you start breaking below 12.7. You got a fair amount of support between 12.560 and 12.525. So it's there's not even clear paths for the most part. There's little remnants of them. There's just not a lot of great short setups unless we get some serious momentum kicking in below some levels. Other than that, tried to break out, but really remember, tech is really reacting to interest rates, and interest rates went up. So today. So let me take off a couple of these other things just to clear up the chart. Again, 12.7 is my major level. Resistance is 12.969. Everything else in here is just short-term patterns. You know, we've had a lot of buying pressure below about 12.775. You can see it here. All the buying pressure. So unless we really start breaking that with momentum, Even overnight, if we pulled back to 12.7, it wouldn't be devastating. To the upside, 12.965. Other than that, it's a choppy mess. I'd just avoid getting chopped up. The Dow, again, sitting against the rotation zone, can't get up. The rotation zone's flattening out, so my real breakout level is above about 12.3,850 still. And then I'll be watching 33. Did I say 12.8? I meant 32.850. Then I'll be watching 33, and then the major area 33.150. On pullbacks, major support still about 32.3. Minor support 32.450. So look, there's no clear path to trade in. This is another choppy mess. So it just would be very short-term patterns until we get out of the choppy mess zone. Russell, we've had now a 2-day bounce back rally, but just in the rotation zone. Nothing has changed. I'm tired of saying that, but nothing's changed. 1785 to 1798 is the resistance area. Key support still about 1741. Other than that, I'm just moving this with the longer pausing bar in case we do break down again for the better targets. The VIX, back, 2061. Not much to talk about there. The DAX, not much to talk about. Geez, everything. The market's just not got a lot of great setups right now. DAX key resistance, 15,445. Besides short-term stuff, there's just not. Support, 15,000. Notes, now this, pretty big. We got some still volatility in notes. Nice little breakdown, close below the rotation zone. So still watching for a pullback to 114.03. That's the key target levels I'm watching now. 114, 114.03. Remember to trigger the double, needs a close below 113.26. Other than that, if you trade back up, I just use short-term harmonics. There at least is a clear path here, but clear path is not a trade trigger. I'd be watching for a retracement move above about 115.16. Again, it's choppy, wide range mess. The yield moving up towards the trigger point on the double. Again, this was a percent B buy on a break above the high with a follow-through close. So it could have been played intraday on the micro yields. So this got the follow-through close, and it's already in the rotation zone. So it really had to be played intraday. If it's going to be carried forward, the major level is about 360, 361. The notes, the same thing, percent B buy above the high, followed through on the close in the rotation zone. If it's going to be played on a follow-through basis, which has to be done on tight stops, by the way, about 410 would be a key level I'd be watching for, at least for a stop raise. Yield curve 10-2s, not much. Dollar index, inside bar to Friday, reacting at the rotation zone, and this prior support level being resistance that was broken on last Wednesday, but nothing yet. No substantial bottoming pattern just yet. So waiting. And now if we start breaking back above about 102.85 and then carries through to 103, it's still tight, but 103.20, somewhere in there with the rotation zone. We start getting above the rotation zone, things could start shifting. Crude was the power mover today. Crude, the power mover, coming up, closing actually above the rotation zone, but coming into major resistance. It really needs to get a follow-through close tomorrow above 73.50. And then I'd be utilizing the next target about 75.40. That would be my next key target area. So that's about it. Just remember, cycles are at the top on crude on a daily, still close to the bottom on the weekly, but this is also heading into the weekly rotation zone. So remember, anywhere up in here, you can see how well it's reacted to weekly rotation zone holding, which now the major resistance is about 77.50. So jot that level down for all you crude traders, natty gas, Still the double is in play, but nowhere near triggering. Gold, bounce coming into a rotation zone and bouncing up just above. Still have the larger potential double top, but nothing there. Now cycles get back to the bottom, but not turning up yet, getting out of the overbought conditions. I'm still watching for some kind of other bottoming, potential bottoming setup here. Nothing fantastic yet. Nothing great yet. You just have a sloppy mess. If you're trying to look for something aggressively above about 1960 on an intraday breakout play, you can see here, there's a pretty big resistance shelf above there into a clear path, with a first target area being about 1969, 1970. So that's the only thing I'm keeping out for a short-term play. Let's just see. Copper's still just an absolute mess. Although, if we do break above about 412, could get there. It's tight with stopping points, but I'm keeping an eye on it. Yen continued. Oh, that's a yen. Bonds continued the follow through with that percent B confirmed buy, watching for a little push higher in the rotation zone before next potential rollover play. Euro rotation up, holding the key support. So now this is sort of nice because anything below Friday's low could lead to a potential short now. Other than that, I'd just be watching for follow through. And here's where I like to use the secondary reaction off this. So next target area 108.20, and then roughly about 108.50 would be the next target areas to the upside. Pound, still perfect example of a sideways correction with the rising rotation zone, but has not been able to break out yet. So from a key stop area, it's about 121.80 from any longs from my perspective. So if it gets a daily close back below there, any longs would be over for the time being, from the short-term time being. Bitcoin, trying to break down with the CFTCs, announcing it over Binance and CZ, but still, you still got the dip buyers. You still got the dip buyers, and no, we don't have a head and shoulders or anything, although we get momentum below about 26,750. I'm starting to watch, but you still got the dip buyers rushing in on anything with some of the charges also are going that are coming out against Binance and CZ are oof. Tesla. Still, lots of red bars, but still roughly a sideways correction. What do we have on the 4 hour? This can still be done as a double. So we're still, that's the only real trade there. Let's see who else is here. Pavneet is SPY, SPX forming a head and shoulders starting. SPY forming a head and shoulders on November 3rd. You mean this big formation? Shoulder. Let me look on the weekly. Shoulder, head, shoulder. Well, if we just use the generic horizontal line breakdown for this and we check it out, let's check it out. Let's check it out. Ooh. Not, yeah, you could still do it. It's roughly okay on the daily. So if you, it's a little interesting. Now on the daily, I would use, see, this is going to get tight. This is going to get interesting. If we went to that daily time frame, hold on. Let me check this out. If we lowered this to the daily, the weekly, this is where it gets a little interesting. Come on. It's going to be tight, but what it's telling us whether the targets work or not. That's really iffy. What this is telling me is I'm trying to force it, but we especially break below about 37.83 on the cash S&P. What's my target? The lows. The lows. And I'd use a couple of these stopping points as. So that's more as I'd look at it. Pavneet. Good question though. Good afternoon, options 22. The big double bottom is still in place, Ted. Hey, Pep G. Hey, Dark Screen. Kratos, is a Dow Cash Jade? Is a Dow Cash? I don't even look at the Dow Cash. We'll just look at DJI. You want the DJI? Is that it? No, no, it's not. Nope. That's a huge mess. Now, this can almost, see how often I look at the Dow Cash. You could, yeah. It's very sloppy. If you were using targets, let's just see. For the Dow Cash, first reaction at the first target, little bounce up. So yeah, if you wanted Dow Cash targets, 39.69, 34, 34. It is valid. It's a little extended, but it's still holding on. So yep, I think it'll play out too. It's just going to be the timing since it's a weekly pattern. So, good job there, Kratos. Did you want to look at PVH? PVH. PVH. I'm still here, just thinking. I do think occasionally. I know some people find it hard to believe. Oh, look at that. Beautiful. So really, the only bullish thing, I mean, it'd be minor. It'd be a tight pattern, but above 75.75 into a clear path, at least a stop raise, if not a target of 78.67. Oh, it's already above that post-market on the beat. So as long as this holds, this 78.80 holds, the next target area, 81.94, and then a minor area with their beat below 83.68 to 85.08. Now, if we get a follow through over the next few days of a close below 78.61, I'd be watching for that pullback to at least 75.66. And nothing new with bingo. Nothing new besides this doubles off the table. Extended. That's not anything to do. This is just a mess. I don't even know why you want an update on it. The only thing is above about 114. You have a gap fill potentially to 124. Other than that, there's nothing. Bingo is crap. AAP, Advanced Auto Parts. Longer term. I mean, it should still pull back more after some bounces. Is there a short-term fantastic play? This is definitely a confirmed on the close a percent B buy, but you're heading straight into the rotation zone. So that's just could be a day or two of follow through. Other than that, I'd be watching for a continued potential move up, a rotation down to get a stronger bottoming pattern down here. You know, because I mean, anything would be scalpy to the upside at this point. This really needs to get some kind of bottoming pattern. And yes, On an extended run, if it started to get some momentum, I'd be watching this weekly rotation zone. But still, you're looking at a potential, it's trading what right now? Close was let's just call it 115s. You maybe could get to 127s, 130s. So you have to keep that in mind. You're trading against a pretty steep trend in here. And here's a major breakdown zone. So if it does sustain something over the next few weeks, if it can get a bottoming, because this is not something we look at all the time, but if it can get some kind of bottoming formation around this 75%, my overall major target would, remember, rotation zone is going to be declining. So right at this point, my major target would be about 131 with at least a stop raise once it hit the other rotation zone. For this one, flat lines preferred. You can, if you want to do something more aggressive on the spider head and shoulders, you can do an upward sloping neckline here. What I'm going to tell you is you have to use a much more aggressive stop. Okay? You can use this. Now, if we use this, we don't have a well-formed shoulder yet. If you're going to use this, and we don't know where it's going to break yet. But look, your second and third targets on the weekly are still It's not good on the weekly. So we'd have to go to the daily. The daily, we're still, let's see. You're just eking it out. So what's this telling me? I would rather do this. You could use this, but I keep this as a very aggressive entry below the neckline because you're going into a key support area. That would be super aggressive. Super aggressive. That's why on these I prefer a horizontal one. But what is this telling me still? Let's say you're just going for below this neckline and it starts breaking down. Look, I'd still rather, based off this, here's key areas I'd use for stops. I'd lower stuff around here, around 371. I'd lower again around 365. And then a potential first key target area would be about 356. And then I'd be shooting for the lows from October. So that's why I don't need to use these targets because it's still sort of forced. Now, if you want to watch this as a potential breakdown, fine. My only challenge with this is you're closing. Look, you close below this neckline over here. You're straight into a major support area from December. So that's why I prefer something horizontal around in here. Does that make sense, Pavneet? This is fine-tuning something. This is using other shorter-term information to help fine-tune it. You'll remember that after 5 years? Well, it might not be crap in 5 years. It's still crap now. There's no trading pattern. It's a penny stock. It's going to need something to get it out of there, dark screen. So there's literally no good patterns. Could it evolve at some point? Yeah. All right. You got that? Good. All right. Gonna, again, keep some of these shorter, everyone. So that's where we stand. If you look at the bigger perspective still, just jump back to keep this all in mind. We've now had this major resistance area at the beginning of Feb. through the middle of Feb that broke down. We're back in the middle the resistance area. We start breaking above this 13K. We could see another push higher in the NASDAQ before a rollover. And the S&P, still watching. We still got daily cycles dropping, but weekly cycles are still trying to turn up. So we have mismatched cycles, and overall we've gone a whole bunch of absolute nowhere. Look at the close back from May of last year. Okay, we're sitting there roughly at the same area. We've gone a whole bunch of nowhere in 10 months. Oh, we're closing in on 11 months of a whole bunch of nowhere. So on the zoom out, you know, you start getting above 4,200, could be the breakout play. You get below this 3,800, the breakdown play. Other than that, it's just shorter term patterns within the bigger thing, within a bigger mess. Yes, I agree, NASDAQ will hit August 2022 high at some point. Is it now? Nothing still. The NASDAQ is trading at an incredibly hefty valuation still going in next season's earnings. It's got a lot to do. At some point, will it hit August? Will it hit this high even from 21? Yeah. Will it hit the high from August to here? It could. It needs that breakout. It could definitely. Remember, the major rollover zone is between 13,626, which is right around those August highs. And eventually it will take out, and it could take 5 years, but it'll take out November's. It could take 3 years. Don't know. But still, it's a big choppy mess. I am watching, to Coco's point, if we do break out, we could make a really strong run to 13,700 area. All right. With that, we still have the insanity in the markets from my perspective. And I will be back tomorrow morning. So have a wonderful evening, and I'll talk to everyone then. Bye for now.